interest rates as they compete with one another. On the issue of Islamic banking, I just want to, I have some history on Islamic banking because I was very much involved in the Treasury in actually approving this first Islamic banking. And I remember I had many discussions with, in fact, some members of Parliament about whether if we did allow Islamic banking, whether it required that we overhaul our legal framework, or do we just need to amend the Banking Act and the Central Bank Act? And ultimately, we agreed we don't need to have a whole new set of laws, and we just needed to amend the Banking Act just to allow for banks to be able to take on to actually buy a commodity and then sell it to the customer. So I'm quite familiar with that area of Islamic banking, including things like Musharaka and Mudaraba systems of funding. So I'm not sure exactly what the current problems are. I know on the issue of the community bank, there is a bank that is, I think the Premier Bank is quite interested in buying some shareholding. I believe it may already have done that, and hopefully that will stabilize that bank. But certainly, I would look into why and how the central bank can intervene in the Islamic banks while maintaining these Islamic principles. On the exchange rate and the depreciation of the exchange rate, which has indeed, yes, has contributed to higher inflation and a rising debt burden, that is all true. But it's important to understand also why the exchange rate has been depreciating, because once you understand maybe the source, then you can understand whether and what can be done about addressing those pressures on the exchange rate. And the immediate reason for this depreciation of the shilling is actually the fact that there's been a general increase in inflation globally, either because of the war in Ukraine, either because maybe the U.S. and other advanced countries maybe in their loosening of monetary policy in the past called quantitative easing, maybe they overdid it, and therefore there was too much money chasing too few goods, and that has fueled inflation even in the United States. Now, in response to reducing pressure on prices and to reduce the inflation, they raised interest rates very, very significantly and very, very quickly. So, for example, in the U.S., the Federal Reserve raised the federal funds rate by 500 basis points within a very short time, which was actually unprecedented in how quickly they raised it and how much they raised it. By comparison, between May of last year and March, because the last increase in the CBR was in March, we raised our interest rates by 250 basis points, so half of what the U.S. had raised. So we have a difference of very higher interest rates in the U.S. and lower interest rates in Kenya, and that caused now capital to flow from Kenya back to the U.S., especially investors who are in the market. And that is what has been causing weakening of most currencies in the world vis-a-vis the U.S. dollar. Now, the U.S. inflation had reached a high of I think it was 9.1% a few months ago. Right now it's about 4.3%. Their target is to achieve a 2% inflation target. Now, will they continue to tighten monetary policy to get to 2%? The chairman of the Federal Reserve says that they will continue to do so. So if indeed they do that, then we still have some turbulence in terms of the impact of it will have on the shilling exchange rate. But having said that, so there are issues that we don't have control over. But there are others that I think we may have, Chairman, which is, I think, more consultations with the banking sector. And I feel that there is room and scope for intensified cooperation with the banking sector. And I say this, Chairman, because it looks like there's a lot of foreign exchange deposits within the banking system. In fact, I think there was a story in the newspaper just the other day where the foreign currency deposits had reached a level of at least 1 trillion shillings. And so this is money that is sitting in people's deposits.
This country is watching this betting, Chairman, and we need to be truthful to our heads. Thank you, Chairman. And using his own experience, Chairman, and I liked it, Dr. Thugge, you have a lot of experience in World Bank affairs. You've even, in your policy department, headed or designed the highly indebted poor countries initiative, what is called HIPC, to deal with poor countries and sustainable debt positions. And you even have publications. And in the process, you got a lot of knowledge. So I'm happy that we are vetting someone who has worked in Bretton Woods institutions, experience in Kenya, and now my question is this. The country is presently under fiscal distress, and this has affected our credit rating internationally. It is estimated that our total debt constitutes 62.3% of the country's gross domestic product, which roughly translates to around 9 trillion. The cost of interest on our debt is now the single largest expenditure item on the recurrent budget, and it is threatening to paralyze the operations of both local, national government and the county governments. In your view, what factors have plunged the country into fiscal distress, and what innovative ways will you put in place to deal with debt? Part two of that question is, as an advisor, and you have just come from your job of advising, as an advisor and fiscal agent of the government, what fiscal and monetary interventions will you adopt to address the issue of cost of living in Kenya? Thank you, Chairman.
Those are questions. You want? Okay, fine. Yeah, I just wanted to add on the discrepancies in the foreign exchange rates in central bank and the other banks and forex bureaus. There's a general feeling that the current governor kept the shilling stronger than it should to help the government foreign debt and the debt in general within limits. And if that's the case, when a nominee, of course that erodes the independence of the central bank. So if appointed, how determined are you to ensure that your monetary policy is not influenced by fiscal policy matters of the government of the day? Thank you.
Thank you. Dr. Thugge, you may respond. Please, Honorable Makilap and Honorable Paul, please switch off your mics. Thank you very much. And on the issue that was asked by Honorable Munyoro on cryptos, as you're aware, the finance bill, we're doing public participation on it, and one of the issues that keep coming up is that the current guidelines of central bank doesn't allow doesn't allow transactions between cryptocurrencies and the banks. So even when the finance bill proposes a withholding tax, they were asking then, how are we supposed to remit that withholding tax when the guidelines don't allow us to trade between doesn't allow us to do transaction between us and the banks. Please proceed, Dr. Thugge.
A question was asked, I think the first question was on the issue of credit risk affecting the banking system. And indeed, Chair, the level of non-performing loans in relation to gross loans has been increasing. And the latest information I have is that it's now at 14.6%. I think last month it was 14%. But I think the explanatory factors are not the criteria of in loan appraisals or even the credit rating. I think it's purely a reflection of what is happening in the economy, Chairman. The manufacturing sector may not be doing as well as it should, and therefore maybe it's not paying its loans on time. There's also the real estate sector. There are quite a number of maybe commercial buildings that are not occupied, and maybe there are also late rental payments, and which means that they're not paying the banks on time. I'm sure there's some contractors who have not been paid by government, and that is also having an impact on them paying their loans to the banks. And of course, we've all read about the pending bills and they're delayed in transfers of funds to county governments, and so that has also reflected in the increase in the non-performing loans. So I think it is not so much the system of assessing credit risk, but that the economy is not performing as well as it could. And I believe that once we are able to unlock the growth, that these non-performing loans will decline accordingly. On the issue of the Section 33 of the Banking Act and the ceiling of 4% over the CBR, of course, this has since been removed. It was, I believe, implemented in September of 2016 and removed in late 2019. I think it did not have a good impact on the financial system. And if you actually look at credit to the private sector since that law was implemented, credit to the private sector has not actually been growing. It's been growing by, I think, maybe on average until last year, on average maybe at 6%. I would imagine over from 2016 to early 2022. Credit to the private sector could not have, on average, increased by 7%. We've seen now a recovery in credit to the private sector since early last year, and I think even the latest number shows that now credit is actually increasing in double-digit levels. But just to go back to the issue of that, the 4%. Because it actually distorted even monetary policy quite significantly, because in fact it almost inverted the way monetary policy works, because the banks could not lend because the rates were too low, and so when the central bank tries to now raise interest rates to rein in on credit, the banks were now willing to even provide more credit. So it almost went in the reverse way, and I think removing it was actually the right approach. And we've seen now that credit to the private sector is recovering. And perhaps maybe while I'm still on this, since I don't know whether the matter will come up again, I think one of the areas, Chairman, that I would like to also focus on, should I become the governor of the central bank, is that I really do feel that credit to the private sector could have grown by more than it has. And I feel that, a lot of Kenyans have complained in the past that, yes, the economy is growing, but they don't feel that there is money on the ground. My take on it is that it's true that the economy has grown partly because of the infrastructure that has been built using borrowed loans. And so a lot of the money actually go back to where the borrowing is coming from. And so we don't feel that money is circulating. But if also credit to the private sector from the banking system is contracting, I think that's where now the Kenyans feel that, oh, the economy is growing, but there's no money. In fact, Chair, if you look at from the end of 2015, credit to the private sector in relation to GDP was something like 33%. Right now, it's 24%. Yeah? Which means had we maintained credit to the private sector at even that 33%, we will be having more than $1 trillion of credit to the private sector outstanding. And I think maybe that is one element I would like to explore to see whether indeed we cannot have a more how to facilitate increasing credit to the private sector, but still maintaining macroeconomic stability, not setting off inflation, and also not setting off, not destabilizing the exchange rate. On the East African protocol, it's true that the goal was for a common currency. I think it was 2024. I think the target was 2024, not 2023. And the question was how far we've progressed. I think there's been some significant progress, particularly in establishing some of the institutions. Of course, as you are aware, the IALA is operational. The Court of Justice, I think, is also operational. And I think in the area of the legal framework for establishing the four key YAMU institutions are also in place. So we have the East African Monetary Institute. I think the Act is in place. You have the East African Bureau of Statistics. I think that was also been put in place. And you have the East African Finance Services Commission. I think that is, and then finally there is the East African, I think, Surveillance and Enforcement Commission, and that is also in place. Where the matter is lagging is on the convergence criteria that was specified in the protocol. For some, most of the countries are close to them. For example, on the issue of inflation, the target was 8%. Most of the East African community countries are around there. I think that should not be a big target to meet. There's also the target for international reserve which should be 4.5 months of import cover. We are 3.5, so we still have some ways to go. But I think other East African countries are close to the 4.5 months of import cover. Where we are, most of us are way off, is on the debt criteria, which is supposed to be 50% of debt in net present value terms to GDP at 50%. We are at 62%. I think it was that 62% was mentioned in a later question. And then there's also the deficit. The deficit target is 3%, and I think most of us are not there. Now, the target for moving to a common, to a monetary union has since been moved to 2031, and I think that should give enough time for countries to just make sure that they meet their convergence criteria. And I think having one monetary union, I think it reduces costs of transactions. It's a bigger market, and I believe that that will contribute to the growth of all participating member countries. On the issue of the housing, just to give just a slightly different perspective, Chairman, our savings rate right now is about 14% of GDP. And our investment to GDP ratio is roughly 19 to 20%. Yeah? So which means the difference between our saving rate and investment, we actually borrow from outside. And that savings rate has been 14 for quite some time. And if you look at other countries, and let me just give the example of Singapore, because the Prime Minister of Singapore was here the other day. Singapore did a very interesting thing 50 years ago. I think when the Prime Minister was here, even our President, when he made a comment, he said, 50 years ago, Kenya and Singapore were on the same level of development. And they did something that we didn't do. And now there's a huge difference in our levels of development. Now, one of the things that the Singaporeans did, and it relates to the matter of the 3%, is that they introduced what they call the Central Provident Fund, and where each Singaporean would contribute 20% of their salary to this fund, and the employers would contribute about 17.5%. Now, the 20% indeed covered three things. One is housing, the other one is health, and the other one is pension. Yeah? Now, just for purposes of comparison between what is being proposed in Kenya, you have the housing fund of 3%, you have the health of 2.7%, and then you have the NSSF of 6%. It's a total of 11.7%, yeah? Which is just slightly over 50% of what the Singaporeans did. So we are starting a journey a bit late, but I believe it's a journey that we should start by increasing our savings in order to increase our investments. So the way I look at this, Chairman, this is it's a savings. It's not a tax. It's a savings. It's a savings that you can clearly see the jobs that are going to be created. Yeah? There's no other program that we have where you can say, if I do this, this is the number of jobs that will be created. This one tells you the number of jobs that are going to be created. And as you know, even from a social point of view, creation of jobs reduces crime, there are all kinds of positive externalities to having more employment. But the point I also wanted to make is, as we increase that employment, Chairman, there will be more spending. People will have more incomes. The economy will grow, yeah? Either from the investments in the housing, I'm not even now talking about the benefits of people now having housing. I'm just talking about the general, the general impact of the additional houses on the economy. And once you do have more growth, Chairman, you're actually crowding other investments, foreign investments. If we can get to a situation where the economy is growing by 7%, pretty soon you'll see investments from Asia, investments from the US, investments from Europe. And so I see this 3% as a catalyst to development in the future. Yeah, so just to make it clear, I see it as a saving, and clearly it is not a tax. A tax you never get whatever you put into the consolidated fund. On the medium-term debt strategy and lengthening of maturities, I think this is not a reversal of policies by the Treasury. I think Treasury still wants to lengthen maturities. But clearly there are some the market right now prefers to invest in the short end of the treasury bills and bonds. And that may be related to some uncertainties, maybe about inflation, uncertainties about the exchange rate, and perhaps more importantly, that they expect the interest rates to continue to go up. And indeed, interest rates have been going up on on the 91-day, the 182, and the 364 T-bills. So there is a preference by the investors to stay to the short end of the curve, the 3 months. Then within 3 months they withdraw and they are able to reinvest. And of course, there are some others who don't want to, at the moment, to invest on the long end of the curve. As interest rates go up and matters and issues of provisions for mark-to-market come in, and then you get unrealized losses. So there's some hesitancy, and I think once now that inflation is coming down, and also if we do approve the budget as has been submitted to Parliament with reduced government borrowing, I believe that will reverse this trend of investors preferring the shorter end of the market. On the cryptocurrency policy, I believe it's not so much, or at least what I read is not that the central bank was rigid, but I think the central bank thought that there was a lot of risks in this asset. It was not well understood, and I think it was only appropriate that the central bank would warn Kenyans about it, and so at least they are aware of the potential risks of trading in cryptocurrency. Now, I know there are quite a number of institutions that are actually right now looking into the matter of cryptocurrencies. I think the CMA is looking at it. The CBK is also looking at it from an AML CFT point of view. And I'm sure they'll come up with their...
When you say AML, SFT, you lose us. You know, that seems to be a jargon.
I mean anti-money laundering and combating financing of terrorism. So they are looking at it from that perspective. I'm sure at the end of the day we'll have a more informed position on cryptocurrencies, what is the extent of their trading, etc., etc. And I think that will then be able to inform us from the point of view of having more data and information on the way forward. On the digital currency providers and the regulations, yes, indeed, the central bank did issue some regulations on for these DCPs. Now, originally, and I think the rationale for the central bank issuing these regulations was for consumer protection. I think there was a time this digital currency credit providers were very aggressive in collecting loans, very aggressive methods, and also maybe even providing data to third parties. So I think there was a rationale for the central bank to come in and protect the consumers, but also in terms of the cost of credit. I believe, I think right now there's about 32 DCPs that have been licensed by the CBK, and I think the process is working well, and I think the central bank will continue to play its role of regulations and supervision of these DCPs. A question was asked about the exchange rate quoted by the central bank as 128, but that if you go to the commercial bank, it's 141. Okay, I'm sure these were just rough numbers you're mentioning, but there was indeed a time, Chairman, where there was a huge discrepancy between the interbank rate and the rate that was being quoted by the central bank and the retail rate. And indeed, at one point, I think it was even more than 10 shillings or even up to 12 shillings. Now, since March, in March, the central bank issued a foreign exchange code to the banks, basically, I think, trying to restart the foreign exchange market, which appeared not to be functioning, and was not functioning because you can't have such huge spreads between the interbank market as well as and the retail prices. And I think also communication was very important, because I think when the new deputy governor went there, he engaged the banks. So I think maybe that combination of the foreign exchange code, which specified how banks should interact with one another in terms of openness and fairness in terms of foreign exchange, and that interaction with the new deputy governor, I think, has begun to correct those the malfunctions in the foreign exchange market. So, if you look at now the rate that the central bank is quoting, I think it's almost 139. It's 138, 139. And actually, if you go to the retail market, it's not more than 2 or 3 shillings more than that. So I think we're moving in the right direction. And certainly going forward, we will want to make the foreign exchange market function efficiently and effectively. On the fiscal distress, yes, indeed, you said that the debt to GDP ratio is 62.3. Just to correct, 62.3 is the net present value of debt to GDP. If you just take the nominal debt to GDP, it's about 69% to GDP. And your question was what factors have contributed to this increasing debt service and how to deal with it. And I think one of, certainly for the last few years, we've had quite high fiscal deficits. And from two sources. One is our revenue mobilization is not what it used to be. And I know Kenyans complain that we are overtaxed, but there was a time that ordinary revenue, and not very long ago, maybe 2013, 2014, when ordinary revenue was 18% of GDP. Yeah. Now, this bill, the finance bill that is going to Parliament, the ordinary revenue to GDP ratio is 14, 15%. So we are well behind where we were 3 or 4 years ago in terms of mobilizing revenues relative to GDP. So one of the explanations is that our revenue mobilization capacity has declined over those years. And the other, of course, has been that there have been some infrastructure developments that has caused also the debt ratio to go up. And how do you deal with it? In my view, there's only one way to. Maybe there are 2 ways to deal with it. One is to have the fiscal consolidation that we have been talking about, and which Parliament has approved in terms of approving the budget policy statement. And Chair, the deficit for this year, we had estimated to be about 5.7% of GDP. And the BPS and the budget that has been submitted to Parliament for next year calls for a reduction of the deficit to 4.1%. Yeah? And then by 26, 27, we expect that deficit to be actually below or around 3.5% of GDP. Yeah? if we follow this fiscal consolidation of reducing the fiscal deficit, yeah, then that is one way of addressing this high debt ratio and bring it back to 55%. Instead of 62, we go back to 55%. But that's so the fiscal deficit deals with the denominator in terms of reducing the debt. But we also now need to implement the policies and the budgets to grow the economy, to grow exports, so that when we now take the ratio of the debt to GDP or to exports, that we see a downward trend on it. On the issue of fiscal policy and monetary policy interventions to address cost of living in Kenya, I think I've already dealt with the issue of monetary policy. I truly do believe that monetary policy must be used to reduce inflation. I see inflation as a tax on everybody in the country, because when prices go up, everybody's real income is reduced, and therefore, to me, it's paramount that we actually address inflation as a matter of priority. But as I've said, I believe that inflation now is on a downward trend. It's last month it was 7.9. The data for this month should come out anytime, if it's not today, very shortly, and we'll be able to see what impact the rains have had on inflation for May. But I do believe that by the end of June, we will be back within the range or below the 7.5, which is the upper range of the inflation or the inflation range. On fiscal policy, I know, Chair, that if you look also at what is in the finance bill, and perhaps we are not emphasizing this so much, but there are some reductions actually in taxes. For example, on the import declaration fee, there is a reduction from, I think, from 3.5 to 2.5. There's also the Rural Development Levy has been reduced from 2% to, I think, 1.5%. I think even for investments, there's a reduction in income tax for those non-resident corporates from 37.5 to 30%. I think also there are some reductions in excise taxes, particularly for these money transfers, charges on money transfers. But I think on the issue of fiscal policy and addressing the issues of cost of living, Chair, I remember even when I was PS Treasury in 2017, in the lead up to the election, we did the same thing about trying to subsidize unga. And I think even the target then was 90, and I remember we even had bags written GOK. And of course the subsidies were removed shortly thereafter, and 5 years later we are back to where we were. So I do believe that from a fiscal point of view, I think what is being proposed, which is to subsidize fertilizer and to fund these dams through a PPP framework, I believe that is the most sustainable way of reducing the cost of living on a sustained basis. Now, and still, Chair, one of the things that we have done in the budget in terms of protecting the poor, we have agreed even with our partners, development partners, that we are not going to reduce the allocations to the poor. I think we've had something almost 400 billion that should not be reduced. And those are in areas like the cash transfers for OVCs, the cash transfers for the elderly. We have also the cash transfers for persons with disabilities. There is also on the education, the free primary education, free secondary education, the school feeding programs, and also some of these universal health coverage. Those are areas that we have said we're not going to lower expenditures on, and that is also one way of reducing the cost of living. I think on the independence of the central bank and how to maintain it, I think I am a strong believer in the independence of the central bank, and I'm sure I'll put it that way. I'll just make it that way. However, I do believe in consultations. Because we must consult with the National Treasury. We must harmonize the fiscal and monetary policies. And so for me, I do not see consultations as a way of diminishing or diluting the independence of the central bank. Chair, I need to have a better understanding on this issue of transactions and withholding tax before I can answer you on that.
Thank you very much. We have a next round of questions. Start with the Honourable Vice Chair, then Honourable C.P. Ruto, and then I'll ask our two friends who've joined, not friends, our members of this committee who just joined us, Honourable Mboni and Honourable Rico, a chance to to ask one question each. You may proceed, Honourable Vice Chair.
Thank you, Chair. I think one of the roles of central bank is bank supervision and regulation of the financial sector. I think at the time of your predecessor, there were two banks which were closed in quick succession. I think it was Chase Bank and another bank. And many Kenyans felt at that time that maybe if central bank was strategic, maybe those banks would have been saved. My question to you is that what are you going to do to ensure that your banking sector supervision and regulation is strategic, that actually closing of any bank should be the last of the things that you need to do for any bank to, so that, because the consequences are huge to the Kenyans.
Thank you very much. C.P. Ruto.
Thank you so much, Chair. First of all, I am Honorable C.P. Julius Ruto for that sake, because I've never introduced myself. Allow me to ask some very basic questions. Dr. Kamau, you've talked much on economics in economic language. But for the sake of our viewers, I want to ask and you respond in as basic as it is. Agriculture, we know, is a crucial sector in the economy of Kenya. The indicators shows that 20% of the GDP is covered by agriculture, and again, it's the greatest employer, to a tune of around 40% of Kenyan population is within the sector. Most of it are in rural sector. Should you be given this opportunity? We all understand now that Kenyan currency is really depreciating because of inflation. Focusing on this sector, what would be your advice to the government should you be considered? The second question, we now have a new phenomenon or a new frontier, what you call diaspora remittance. And from the reports, economic reports around the world, Kenya is ranked among the top 3 countries that benefits much from the remittance of diaspora. In your view as an expert, what do you advise that this remittance could be utilized for the purpose of building up this economy? Lastly, I was traveling in a flight from Mombasa the other day with a friend of mine from a pastoralist community. And I don't intend to mean Songuya who is coming from Masai, but from a pastoralist community. He asked this ranchi. The other day, he opted to sell part of his art, that is the bulls. And he fetched good money, more than 3 million basi. Now, when the money was taken to the bank...
3 billion or 3 million?
3 million.
Oh, okay.
Yes, not 3 billion. When he wanted to deposit the money at the bank, you know what the bank is saying? Produce a receipt. And you know, these people who come and buy, they come to your yard, they choose what they want to buy, they sell them, and they want to deposit the money. In your view as an expert, and being the governor, I presume that you will be vetted by this committee and they will consider your nomination. This policy of requesting or asking commercial banks to be too particular and detailed on information they need to provide, both on deposits and withdrawals. That now, while this man was being sent home, you know what he did? He went and bought dollars. Because it is easy to carry dollars, so he has the dollars in his pocket now. He walks around with the dollars. Because the bank refused to receive, just because of failure to produce a receipt. The policy of withdrawal to a maximum of 999,000, in your view, do you think it has helped to save, or is it discouraging mobilizing of money in the bank for managing of credit? Is it part of the reason that why dollars are scarce, that people have opted to keep dollars like this friend of mine in the pretext of avoiding a lot of questions? Thank you.
Thank you. And I think there has been regulations that should have been tabled for Parliament for approval on that, and I think that has never been done, so I think you may respond to that as well. Honourable One, you have a follow-up question?
Thank you very much, Chair. And my name is David Boni, Member of Parliament, Kitui, and I think the nominee is my friend. We know each other very well. I mean, we used to work in Treasury together, so it's not a new person to me. I don't know which question, because I don't know which you have asked and which you have not asked. But anyway,
it was more of a chance to introduce yourself.
Yes. Yeah, but the new monetary policy thinking is that you cannot undo monetary policy without the fiscal policy in place. I mean, you need that mix of monetary policy and fiscal policy. And I've seen you have done some work on fiscal policy. The latest, actually, you have been doing some work, some papers on fiscal policy in the country. I know this country is facing a lot of challenges in terms of fiscal discipline, fiscal deficits, and all that. What is your view on improving policy coordination between the monetary policy and the fiscal policy to ensure that there is stable financial sector and economic development? That is number one. Number two, recently the central bank came out and told us that remaining reserves is only enough to cover 3.3 and 3.6 months of imports. And that is a very scary situation, because, as you know, the country is facing a very severe shortage of dollars. And you know, this 3.6 is actually below the CBK requirement of maintaining 4 months. What is your take on this?
Thank you. Honourable Makilap,
Yeah, some follow-up questions on the answered questions. I agree with him, and we've checked. The current CBK rate for today is 138 point something. The other one is still in 141, around there. So the deputy governor actually worked hard to bridge the gap. But I thought the gap is supposed to be bridged downwards, but not bridged upwards, because the difference now is small, not like previously, but again, it's at a higher level than bringing it down. And I think CBA Ruta has just something very important. Why is Kenyans keeping and banks holding dollars? Because it seems there is some dollars being hoarded somewhere. So can you just finish that so that we are in the same page, so that Kenyans, if you want to exchange, it is the same in the banks and it's the same as central bank. The other one is, in your own words, and I have learned it today. It looks like you are an architect of this finance bill, and because you know so many things that I have even learned. 6% NSSF. So, nominee, payslip of our Kenyans. You quote Singapore. Singaporeans started this thing 50 years when they had no market within themselves, when they had no circles they were saving for themselves. They started at 20%, because if you start with 20% when your payslip is clean, good to go. But when the payslip is already torn apart, your server, what is your thinking of raising salaries for Kenyans so that they can be adequately able to meet this cost? Because look, and we add together, payee on a payslip of Kenyan, 30%. NHIF, 2.7. NSSF, 6%. Proposed housing fund, 3%. Superannuation scheme for civil servants, 7.5%. Other loans that the employee has, several loans somewhere, plus savings in SACCO, like may have a SACCO and so on. Honestly, what do you think will be left to that Kenyan? How best can you improve the payslip of Kenyan so that when we apply all these loans, because if you had it costs to 50 something. So it doesn't make sense to earn a salary in Kenya and you earn of it, all of it being taxed. How do we, as a country, be able to boost that employee of government so that he can be able to adequately, make the repayments? This is something very natural and it is fair for the country. And you are an expert. Kindly advise.
Thank you,
Thank you, Chair. I think I just wanted a follow-up question on, because Dr. Thugge has spoken extensively on the GDP. And I would like to hear your opinion on this issue that we are getting from Treasury in terms of having now the loan ceiling, the debt level, the debt level being a percentage of GDP as opposed to a nominal figure, because we are almost hitting the ceiling.
Thank you very much. You may respond. Honorable Soko, you have something to ask? I really implore you not. Any honorable member, because it's an answer of question. Honorable Bariko, just go direct to the point, because we have the vetting of the NIS director coming at the same venue in the next 10 minutes. So, Dr. Rico.
Thank you, Chair. Chair, I'm Dr. Rico John. I'm White Member of Parliament for Turkana South, Turkana County. My question is on how you are going to address inflation in this country. We've seen inflation rising every time. And we know you are in Treasury. You are the man in charge of Treasury. You've been foreseeing a lot of things happening in this country. So tell us, how are you going to handle this matter of inflation? The second question is on the issue of debt ceiling. We've seen America, USA, now currently approving $34-point-something trillion in terms of nominal value as a debt ceiling. Now here in Kenya, we want to taste something called debt hunger. Can you tell us the difference between the two and what are the implications, given the fact that I've heard there's a proposal of 65% of the GDP, a proposal somewhere. And currently, we understand that our debt ceiling is at the current status of our debt is 9.4 trillion.
Okay.
Our GDP currently ranges between 13 to 15 trillion, 13.5. So if you get the percent of 65 of 13.5, it comes below the current status of our debt. What is your take on that? Finally, your PS, Treasury PS, during the so-called Aror.
Honorable Boriko, you just got in. That issue has been addressed.
Has been addressed?
Yes.
Thank you, Chair.
CPO Yula.
Thank you, Chair. Chair, may I start by apologizing to come late. My name's Joseph Mairo Oyula, a Member of Parliament for Butula, and a member of this Finance and National Planning Committee. Daktari, I welcome you to this meeting and wish you well. But I have only one observation, which I wish to ask you to look into if you succeed to take over the mantle of the central bank. The concern here, Daktari, is on domestic borrowing. The level of domestic borrowing
is rising very fast. In fact, as we complain about debt, the portion of the domestic debt is higher than external debt. And in normal situation, we should borrow more externally and leave the wananchi to take some of the cash the banks are now holding. I don't know how you will help the government to control this domestic borrowing. It's the central bank that helps the government to borrow. So we need to look into this situation and bring back our domestic debt to a more manageable level. Thank you.
Thank you very much. Honorable Sunkuya.
Thank you, Chair. My name is George Sunkuya, MP Kajiado's constituency, and I'm a member of this committee. And I want to take this opportunity to congratulate you for your appointment, Dr. Kamau, Thugge, the former PS. Chair, I want to ask that I know that this committee will definitely approve you.
No, Honorable Sonko, you are out of order. You are
I withdraw.
completely out of order.
You
have to withdraw.
I have withdrawn. I have withdrawn.
Thank you.
I have withdrawn.
Proceed with your question. Please go
Chair,
back to your
thank you
question.
so much. I want Kenya has witnessed consolidation of banks since independence, driven by different factors. In the current period, the government has, through a sessional period, a sessional paper number 2 of the 2012 on Kenya Vision 2030, and has labeled a framework and carried the mergers and acquisition within the banking sector with the primary objective to develop a sound and resilient financial system. What is your view on how these mergers and acquisition influence in the performance of financial services sector?
Thank you very much.
Thank you.
I'll allow you less than a minute, Honorable Paul.
Okay. Thank you. Dr. Mine would be, what mitigation and measures are you going to put in place? The other day, I lost some money, and the banking sector has consistently reported loss of funds as a result of cyber crimes and money laundering and unauthorized system access. What are you going to do so that you are going to help the common mwananchi? Because even the banks themselves have reported billions of money being lost. I lost the other day some good amount through this MasterCard, and somebody managed to hack my account all the way from the US, and up to now I'm still following the bank. How are you going to protect the common Kenyan or the Kenyan people in this kind of fraud? Thank you.
Thank you very much.
No,
Okay.
Just a follow-up question.
Okay.
Not a question, actually just to support what Mheshimiwa Oyula on the domestic borrowing. Some of us as economists, we are seeing the Housing Development Fund as actually a domestic borrowing. It's a tool to borrow from the people. Because see, we are saying after 7 years, this money can be refunded. That means it's a borrowing. So when you are answering the issue of domestic borrowing, please just give us something on that.
Yes, and perhaps also to guide Honorable Mboni, the question on housing levy had been asked, and Dr. Kamau Thugge actually explained on the matter.
I want you to treat him
as a domestic
borrowing, not as a housing levy.
Okay.
In fact, you could not even ask him about the housing.
All right, all right. Dr. Kamau Thugge, we have only 5 minutes. Try to thematically answer those queries in the next 5 minutes. You're welcome.
Actually, quite very many questions. So So I'll try to be brief. I think on the first question is about closing of banks, and the example of Chase was given. Yeah, I think indeed, I think many Kenyans felt it was done in a rush. And I do agree with you. I think closing should be a last resort. And the CBK should even stand ready to provide liquidity to save the bank if it's solvable. And so I think before I would make a decision to close a bank, I think I would look at it very closely. But of course, the protecting the financial system also requires that banks keep enough capital and liquidity buffers, not just to depend on the goodwill of the CBK, so that before even the central bank intervenes in terms of liquidity injection, there must be a demonstration by the bank that it's been attempting and it's been fulfilling its prudential regulations. Now, I think one of the things, Chairman, that the central bank is working on is on this electronic data warehousing, where they bring in all the data from the banks, and that data is available on a real-time basis at the bank, and so people who do the off-site inspection will be able to see in real time how banks are doing. And I think that is a very good development, which I will certainly try to fast track, because I think the sooner you can get real access to data, then you can take early corrective action, so that you're not faced with a situation of having to decide whether to close the bank or to inject liquidity. On agriculture, I think agriculture is very critical for the economy. As you said, if we get agriculture to grow, it has a huge impact on the growth of the economy, has a huge impact on employment. It has a huge impact on the cost of living, and ultimately, if it's affecting exports, and if it's affecting the reduction of imports, because now you're producing the food that you should be that you could be importing, that also has a huge impact on the balance of payments and on the reserve accumulation. So that's the way I feel about really the importance of the agricultural sector. It cannot be understated. On diaspora remittances, again, I believe we need to engage. There's the new Ministry of Diaspora Affairs that also we need to engage. And as I said earlier, if we can also, as I said, it's good to sometimes also experiment. If we could issue that dollar-denominated bond and also encourage the Kenyan in diaspora to invest. And also to, I think somebody early on asked about this accumulating of dollar deposits.
Yeah. But then how would we make sure that if we would do such a dollar-denominated bond, that it didn't also, again, crowd out Kenyans? Because if you're opening it to diasporans, how do you make sure that it's actually Kenyans who are who will benefit from, or who will access that domestic, that US-denominated Kenyan bond? Yeah.
Okay. There may be. I think the thing would be to, as I said, to engage with the Ministry of Diaspora to make sure that people in the diaspora know that we are going to issue this bond, and that and you encourage them to come and invest in it. I think if other also invest, I think that is still okay. The whole idea is also to get foreign exchange into the economy, and so if it comes from non-Kenyans, I think that still is okay. I think broadly on the issue of the herder who sold and had 3 million. I think, Chair, this is an area that we'll have to look at. I think the limit of the $10,000, I think it's $10,000 for deposits and withdrawal reporting. I think that is a standard under the financial, this FATF Action Task Force guidelines. I think the question in my mind is whether all countries operate the way we operate, requiring all the kind of details that you are mentioning. And because I also believe that we should not go outside these international standards on anti-money laundering and combating of terrorism, I think we just need to look at how other countries administer it, and whether it is as convenient in those countries as it is here, or whether the banks here are more risk averse and require more information that is necessary to implement that standard, which is an international standard. So I think what I can say is we'll look into the issue if appointed, just to see how whether what we're doing is actually the best practice, or whether the banks are asking for too much, which is not required by the law. I think on coordinating and harmonizing fiscal and monetary policy, I think I've spoken on that. I am a firm believer of consultations. I've done fiscal policy, so I know issues to do with fiscal policy. I know issues about domestic borrowing, so I'll be approaching it now from the monetary side. And as I said, I believe in consultations and not being antagonistic. There was a question about the reserve position has moved to 3.6 months of import cover, and that this is risky. And what my take on this is, it's true that this ratio is below the 4 months that central bank aims for, and certainly it's also below the 4.5 months under the East African convergence criteria. But having said that, I don't think it should worry anyone. I think this week, if not this week, we are getting $1 billion from the World Bank under the development policy operation. That will raise the ratio to at least 4 months of import cover. We are also agreed at the staff level with the IMF, and we expect additional resources to come in July. And I think also, if we maintain a bit of flexibility in the exchange rate, that should also serve to protect the level of international reserves. But because I don't have time, I think there are two approaches on this issue of the foreign exchange and the adequacy of foreign exchange. I think there are short-term measures, but I also would have liked to talk about the long-term measures and how we would need to strengthen the level of international reserves on a sustained basis over the medium term. I think on the issue of the housing fund and raising salaries, and I think all I can say, Chairman, is that we need to grow the economy. And I think the answer to all these issues of even contributions is about growing the economy. And I believe that, and I explained earlier what is in the budget and the issues even of these value chains and how we have budgeted, and if we implement them, how the economy will grow. But I also believe on the side of Parliament, I think you also have a role to play. All that we have been talking about even today is how do we contain and even lower interest rates. And you have a very strong role to play, because unless we can achieve the fiscal deficit that is now in Parliament, we will not be able to lower those rates. And it's my belief, Chairman, that if we even approve lower revenues and have a higher deficit, what is likely to happen is that you have domestic interest rates will go up, and they'll go up purely for selfish reasons. They'll say, okay, the government doesn't have the revenue, so it has to borrow. It can't borrow outside, it has to borrow locally. So they'll wait for you to come and borrow, and they'll raise interest rates, and pretty soon interest rates will go up. It will affect the economy, it will affect lending. In addition to that, the foreign access to foreign capital will also be shut down, because foreigners would say, oh, why should I lend to you? You are reducing your revenues. How do I know you will pay me back? So even the market, external market, will dry up. So I think Parliament has a role to play in terms of maintaining the low interest rates and creating that environment for the economy to grow. I think on the loan ceiling, as a percentage of GDP, I very much support the proposal. And the proposal doesn't come out of thin air, Chairman. And perhaps, I don't know if I have time to go into the details, but the 55% is actually the net present value of debt to GDP is 55%. That is the proposal. I think that is a proposal to move to that. And many studies that have been done by the World Bank and IMF, they have determined certain thresholds that connote debt sustainability. And for a country like Kenya, which is rated, I think it's rated medium in terms of debt carrying capacity, one of the ratios is 55%, and that is the total debt in net present value terms to. And so that gives so it gives you a target to move towards a specific figure where it is, you know, that the debt is sustainable. I think one of the problems that we made is removing, you know, before we had, the target was actually 50% of GDP. And then we removed that, and then we put in the 10 trillion. The problem with putting the 10 trillion, it doesn't even distinguish between whether that debt is concessional or non-concessional. It is just a number. And as you know, Chairman, 1 billion of concessional debt and 1 billion of non-concessional debt, they don't have the same debt burden. One has a lower one, the other one has a higher one. So just having a nominal debt does not, I think, is actually the wrong way to go. And so I really would support having an anchor where we now move towards that debt ceiling. And as I said, the fiscal consolidation path that is actually in the budget policy statement and that Parliament has approved as part of the budget policy statement actually leads us to that debt ceiling. And since Parliament is the one that approves budget every year, you should be able now to check and see whether we are actually moving towards that debt ceiling.
Okay, thank you very much.
I think I've addressed the issue of inflation and in terms of monetary policy, but more importantly, the reasons for the high inflation was because of high food prices, the drought, and of course high fuel. Some of those are going down, so I expect inflation to actually be coming down. Bwana Oyula, you mentioned, you mentioned about domestic borrowing and how we reduce it. Again, this is a matter that belongs solidly with Parliament. The Treasury has given you a proposal to reduce domestic borrowing. It has given you a proposal to reduce the deficit. It has given you a proposal to reduce the accumulation of debt. So it's now for Parliament to see whether they are agreeable with that and to approve both the appropriation budget and the finance bill. On the issue of bank consolidation, I think I had covered that before. Cybercrime, I think on issues of cybercrime, this is an area that I think is of national security importance, and I think collaboration and coordination with the NIS, I think, will be part of the my top agenda. I don't know whether I've covered all the questions, Chairman.
You actually have addressed all the questions.
Really, Chair?
Yes, for sure. Dr. Arigo, I think I really want to thank you for your time, and thank you, honorable members, for the good consultation we've had. Thank you, Secretariat, and thank you, the press, for continuously keeping us informed. I will give you 1 minute to make your closing remark, but I have this comment for you. You have a benefit of coming from the academia, where decisions are based on research. And this is just a comment, it's not a question. I hope that if you're given this chance, that you would influence that decisions made by the bank are actually informed by research and policy. Because once we have been listening to Kenyans and they're telling us, have you done research? Is this informed by data? Is this informed by a particular research and policy and data? So really hope that if you give it this chance, that the decisions are going to be made, that are going to make at the bank, are actually going to be based on research. Thank you very much. Make your concluding remarks.
Thank you, Chairman, and thanks, members, for all those very important questions. I think, Chairman, the only thing I would add is that should you find that I qualify for this job, there are a few things that I would like to focus on. The first one is this issue of inflation that a lot of people have raised. As I said earlier, I did actually my dissertation on modeling, macroeconomic modeling, and I know the central bank is really fine-tuning their forecasting model, and basically to understand the monetary transmission better, and so that they can have a modern monetary policy framework. And so that's one area I would like to focus on, so that we know, if you lower or if you increase the CBR by 0.7%, what will happen to the economy? What will happen to credit to the private sector? What will happen to inflation? So I think I certainly would like to focus on that and just get a better understanding of the impact of monetary policy on various aggregates. The other area, Chairman, I alluded to is this improving of bank supervision and this real-time, being able to on a real-time basis to see what is happening within the banking system. I think already these digital credit providers, they are onboarded, and so I think that from the central bank they are able to see on a real-time basis what is going on with the banks. So that's one area I'd also like to focus on. Another area, and this is an area where, Chairman, I made, if I do get the position, it may come to you for support, is on the Microfinance Act. I think there's a microfinance amendments that we had done, that the central bank had done some time back. It was submitted to Parliament, I think last year, but nothing seems to have been done about it. But clearly, microfinance institutions have an important role to play in the financial infrastructure of the country, and so I'd hope that we can move that forward. The other area is on this issue of credit to the private sector. It bothers me that the credit to the private sector in terms of GDP has been declining every year for the last, 6 or 7 years. And provided now that we have a good handle on inflation, and inflation is firmly within this target range, we must see how, from the central bank, we can incentivize and try to get credit to credit growth to be a bit more robust. I'm happy that we are where we are. I think now it's 13% on year to year, and I think I would hope that we can actually now continue on that path and reverse that decline in the ratio. The other one is on the payment system. I know this is we have several payment systems. We have the Kenya electronic payments and settlement system. We have also the East African one, and we also have the regional one. But I think going forward, and this will also be a priority if I do get the job, is to have this Pan-African, this thing is called Pan-African Payments and Settlement System, which is being championed by the Afri-Exim Bank. I think that is because we are going into this African continental free trade area, and it's likely to be very important for even the jobs creation in Kenya and growth. I think that is one area on the payment side that I would like to focus on. I think, Chairman, those are the key areas that I think I would like to focus on if I get the job. Thank you.
We thank you very much, Dr. Kamau Thugge. That was a very engaging conversation. We wish you all the best. This committee will consider the way you have articulated your issues. We look forward to receiving the originals, academic certificate in the next 7 days so that it can enable us to make an informed decision. We thank you and wish you the best. Thank you very much. Yes. That's okay. Yes, and Daktari, also the issue of digital lenders is a key sector in the banking sector that needs to be properly looked at and supported. Thank you very much. Lastly, honourable members, you may take your leave, Dr. Thugge, and get back your original ID. Honourable members, this afternoon at 2:30, we are supposed to have a meeting with SIPA. But as expected, honourable members, they have written to us regretting that they are not able to appear before us. And we shall therefore invoke our Constitution, our standing orders, Article 191. We will give them one additional invitation, and if they do not turn up, we are going to issue a summon. So, SICPA, we have received your letter. We'll give you a discretion. You have one more chance to appear before us, and if you don't, you're going to get a summon as per our standing order 191. Thank you very much. The meeting stands adjourned.